Hi traders, welcome to my video on the Relative Volatility Index Indicator. In this video, I'm going to show you a simple strategy that you can use to capture moves such as this one for almost 900 pips. This is the MT4 trading platform I'm using, and this is the Euro-Dollar 4-hour chart. Okay, you can use this strategy on any trading instruments, so Forex, stocks, cryptos, commodities, indices, etc. And any chart time frame. I personally prefer the 1 hour charts and above, so the 1 hour, 4 hour, daily, weekly, monthly, simply because they contain more price data and therefore I find signals tend to be more reliable. That's not just with this particular technical indicator, but with price action analysis, support and resistance, trend lines, candlestick patterns, so on and so forth. Okay, so I have the indicator here below the chart. And this is a trend trading strategy. I like to trade with the trend. I mean, I'd much rather capture moves like these for hundreds of pips than try and scalp a few pips all day long chart watching on the 1 minute or 5 minute, even 50-minute chart time frames. Okay, I'd just rather take a time a good trade into a long-term trend and just ride it as much as possible. So that being said, what I look for on the Relative Volatility Index Indicator is all of the lines to agree. Okay, so you can see here we have all of the lines are agreeing in a downwards direction. They're all lined up nicely as well, pointing downwards in the correct order. Okay, and then once that happens, what I'm going to do is I'm going to look to time an entry into the trend. Okay, so if we zoom in, we can see we have a nice area of resistance here as well. So we can see prices moving away from this resistance area, so that's a good sign. We also had a breakout of this level. So there was this trend upwards here, and we had a breakout to the downside there. As I said, this is a 4-hour chart, so support and resistance tend to be quite reliable if you draw them correctly. You've got a nice wedge formation there, triple top candlestick formation as well. Okay, an M chart pattern and a breakout to the downside. This support then becomes resistance, and we have a continuation. And this is where, probably around here, or when the lines start to line up, you can see in the downwards direction. So what we could do is, for an aggressive entry, we could have traded a break of this level of support. Okay, see this is quite a strong support level in here. I'll just zoom in for you. See this level of support, resistance, and we had a breakout to the downside. The market's making lower highs, so aggressive entry into the trend here. Relative Volatility Index is showing us downwards momentum. Alternatively, you can wait for the trend to actually form. Obviously, don't sell at the low there. Wait for another pullback, and then you can just trade on the breakout of the next support level. So that one, okay, and support becomes resistance, price continuation. Again, same thing happens here. Pullback, level of support, and a breakout to the downside. However, around here, you can see these lines are quite far apart. You don't want to end up selling too low, okay? Ideally, we want to get in as early as possible up around here somewhere. And simple as that, really. And if we just, for money management, what I'm going to do is I'm going to put for a sell trade stop loss above the recent high. Okay, so in this situation, for this breakout trade, this would be the high around here. So only around 15 pips, which is a really tight stop loss for the 4-hour chart time frame. When you consider how far this, we have the trend down here over 350 pips and actually continues after there for almost double that. But what I would have done is I would have, as soon as price dropped down here, moved stop loss to break even, just lock in the trade, okay, in case it turns around. We don't want to let a winning trade turn into a losing one. And then I just trail the stop loss above the highs as the price continues to fall. So above the high there, 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 and basically just ride the trend as much as possible. Okay. What I wouldn't want to do is have a 15 pip stop loss, see this drop here, get excited and panic and just exit the trade for 70 pips, whereas it may have looked like a good trade at the time, just leaving way too much on the table. Okay, and that's why I don't use a fixed take profit. I just prefer to use a break even in a trailing stop to maximize a good trade as much as possible. Keeping in mind this is a 4-hour chart, so you don't even need to frequently check your charts every four hours or so to manage positions. You can even set alerts as well. Okay, and some traders may exit when there's a crossover, the relative volatility index indicator. You can do that as well. Just exit part of the position. I wouldn't exit all the position until, say the market, perhaps around here as the market makes these higher lows and starts heading in upwards direction, then we may consider manually exiting all of the position if we haven't had our trailing stop taken out. Okay. And that way, when we're catching big moves like these for hundreds of pips, we can afford a 15 pip stop loss here and there or a 20 pip stop loss. Even if you had 5 stop losses in a row of 20 pips, okay, you're down 100 pips and plus broker fees. But then your next trade, you get 300, 400 pips. I mean, you can make back those losses and some more, and you shouldn't really be losing 5 trades in a row if you're, timing your entry well. Don't sell at the low, don't buy at the high. I like to trade with the trends. Trend is your friend. Okay. I think that can give us an edge. And then we can wait. We're drawing this trend line here. So what we can do in this instance is we can wait for the new trend to form. So you have the breakout down here. Okay. And then there's a pullback here. And when the lines start to do basically what they did back here, when they all line up, okay, you can see around about here, if not earlier, here, either way the support line is going to be the same. So we just draw the support in line with the trend. Market's making these lower highs. You've got lots of bearish price action there and a breakout. You can see there, no coincidence, big breakout candle. Okay, traders are trading this, and there's another trade there. If you miss that initial entry, you can always wait for the next pullback there. There was one actually prior to that here as well. In fact, that support then becomes resistance here, just emphasizing the power of these levels. Even this one, this level of support, we traded this breakout, you can see this support then becomes resistance here, and even over here as well, almost bang on the line there. Just emphasizes the strength of these levels. Okay, this is why I don't rely on potentially lagging or repainting indicators that claim to have, be some kind of magical signal provider. I think price action tells you everything that you need to know, combined with good money management, good discipline. Don't let negative emotions such as fear, anger, and greed cloud your trading decisions. Don't revenge trade. Don't get FOMO, fear of missing out, of forced trades and overtrade. Take trades that aren't there. So many trading instruments to choose from, different time frames. There's always going to be opportunities like these. Don't sell at the low. Don't get excited. See this drop down here and then think, oh, let me sell here. And if anything, this indicator would be good as well to keep you out of trouble. Because if you were, for whatever reason, thinking of selling there, you could just look at the indicator and see it's pointing upwards. Okay. So that would have prevented you from trading there. Just look for scenarios where they're all sort of lining up in agreement. One thing I will say is indicators are not perfect. Okay. Because, for example, I can see a potential trade there, this downtrend here. See that nice support ledge, that support actually becomes resistance later. But if we just look at the entry on the breakout there, okay, the indicator wasn't actually signaling for us there based on my interpretation of it. As you can see, I want this line to be below, okay, and the indicator is actually flat as well. And then to be fair, the market is more in a consolidation state then, but that still would have been a decent trade. Had you have waited for this line to cross below, it would have been after that move. There's even an opportunity there as well. Okay, breakout, that support becomes resistance and a continuation. Indicator, I didn't pick up on those, so just to show you that it's not perfect, has no indicator is. For an uptrend, basically we can apply the same principles. So we look for the lines to be aligned in the correct order for an uptrend. So anywhere really around here, all facing up. Can draw a resistance. Okay. Nice W chart formation there. Bit of a bear trap here. Traders who were selling up here were probably exiting their position down here. Okay, and then traders who were trying to jump in on this downtrend are selling at the low. and their stop losses are getting taken out around here just as the traders who were in earlier are taking profit. It just causes this big shift of momentum to the upside. You can see that big breakout bar up there. Okay, we could have jumped in on that on the breakout of this line. Had you missed that opportunity, again, just wait for all of the lines to align up, and there is another breakout of resistance in there. You've got your nice wedge pattern formation there, market making these higher lows. Not the ideal setup, this one, simply because of this level of resistance here. But you can always wait for that to be breached and then enter again up here somewhere. Okay, the lines are still agreeing there. So yeah, that is basically a simple interpretation and way to trade the Relative Volatility Index Indicator on the MT4 trading platform. There are variations of this indicator. You can, of course, adjust the settings as well. I've just used the default settings of this particular Relative Volatility Index Indicator that actually uses moving averages for its calculations. And the most important thing would be just timing your entry, really, and having good money management. You know, I'm not going to have a 20 pip stop loss and a 20 pip take profit, because it's just, you can just end up chasing your tail. I'm not going to try and mark support and resistance on noisy 1 minute and 5 minute chart timeframes and just get whipsawed in and out of the market. And to be honest, I wouldn't even say that you needed this indicator. If you just look at those trades that we've taken, if I just hide the indicator down there, I mean, we could have taken these trades anyway with, that we had the breakout there to the downside, we had the resistance, we could see the market was falling down here. Okay, falling down here. We knew we were in a downtrend, and we just mark our support and trade the breakout. So you can keep an eye out for candlestick patterns to confirm your entries as well. Okay, hopefully you found something useful in this video. If you can like and subscribe, that would be great. Do appreciate you watching, and I hope to catch you on the next one. Take care.